Ladies and gentlemen, a stock market bull run is likely to reignite again. Please watch on to understand why I came to the conclusion and what are the circumstances that can lead it not to happen. Okay, so the title of my talk today is about a stock market bull run will reignite again. And this time my data points are not from US. Okay, and let's watch on, shall we? The usual disclaimers, please read. I've been looking at inflation data so far, largely from US. All the data points are from US because our stock market are purchased in US. But the truth of the matter is that because of globalization right now, if you haven't noticed, inflation, it is not a local phenomena, but a global phenomena. You in Singapore and Malaysia has felt the full impact of inflation. And I'm now in Europe, and it's full of inflation, okay? And UK has inflation, Australia inflation, US inflation, everywhere have inflation. And as a result, all the central banks are increasing their interest rates phenomenally. That's of course led by US, and the Fed fund rate has gone up phenomenally. But not only US has gone up, UK has gone up as well, okay? Australia has gone up, okay? And the EU, Eurozone has gone up as well. So many interest rate across the world has gone up to fight a global inflation. So far, when we look at inflation data, we try to predict it from a US perspective. And so the underlying assumption is that if inflation were to go down in US, then US central bank, which is the Federal Reserve, would lower its interest rate, and that will spark off a bull run. So maybe we do not need to look at just the US data, and maybe we should spread out and take a look at what other data points are there across the world. In the last FOMC meeting, Jerome Powell has surprisingly been more bullish. All of us were thought that he's going to talk about increasing interest rate again because the first quarter inflation rates are pretty bad. But he reiterated that they are not considering interest rate, and that caused the whole stock market to bull run again. That's despite a first quarter rise in inflation and a higher oil prices. A few central bankers across the world has now give very interesting data points ahead of the Federal Reserve in US FOMC meeting report. So the Bank of England governor has now just came out and said that, you know, they are very close to a rate cut, interest rate cut, possibly in June. He even was very specific to say it's possibly in June. And as he predict a below target inflation, what he's saying is that the inflation rate in UK could go below the target of 2%. And in the recent report, the Bank of England governor, which is their central bank governor, actually hold the interest rate where it is, but he says this specifically. He says that it is optimistic that things are moving in the right direction, which basically means that inflation is going to come down. And that's very specific, okay? Providing more data points than what US are providing. The Bank of England is a lot more concrete in producing inflation forecasts. So right now, the UK inflation has gone as high as over 10%, but it's came down, okay, to about slightly above 3%. But he specifically says that inflation is expected to fall close to the 2% target, okay? So it's a strong prediction by this year, inflation will go down all the way to close to 2%, right? So that's a very concrete prediction. And that's a good news. That's a very good news, right? And if the UK inflation is coming down, chances are the rest of the world will also come down because it's a very highly interconnected world where data points are all linked together. Prices are all more or less uniform across the world in some sense. The Bank of England governor is more concrete and more detailed in providing a prediction of what's going to happen. Let me quote him, okay? He says that we have encouraging news on inflation, and we think it will fall close to our 2% target in the next couple of months, right? That's very, very powerful prediction. We need to see more evidence that inflation will stay low before we can cut interest rate. So that's a caveat. But he specifically said, I am optimistic that things are moving in the right direction. That's a very strong thing, right? Clearly, the Bank of England governor is seeing more information than I do and you do, right? So Bailey, which is the bank governor, indicated that financial markets are more pessimistic about the path of inflation rate. and it's likely that we will need to cut bank rates in the coming quarters, possibly more so than what is currently priced in the market. So not only did he say that an interest rate cut is going to come, he actually said that interest rate cut is going to come more than what is currently priced in the market. So that will cause two markets to go up. That will cause the stock market to go up, and that could cause the bond market to go up as well, right? But he specifically put a caveat and say that what he further add on is that a cut in next meeting in June has not been ruled out. So it is possible, right? Possible, but don't consider a fiat accompli, which means that it's not done deal yet, but it's possible, right? So it's very strong statement from Bank of England governor. So let's switch camp from Bank of England, okay, to the ECB, Europe Central Bank. So in the whole of Europe, there's of course UK, which is now out of EU, and then there is the EU. So two entities right now are looking at the same problem, right? And interestingly, the Europe Central Bank specifically said that they are more confident about cutting interest rate right now, right? More confident, right? So it's a very positive statement. And this is the Euro Central Bank chief, and she signals that a plausible June rate cut, okay, is coming. Okay, plausible. That means it's likely to happen, not 100% likely happen. And then Europe equities hit record high. So that's a very strong signal that interest rate cut is coming in UK and Europe. Right now, the ECB is now weighing two risks. It now says that the cost of undershooting the inflation rate target is now on par with overshooting, which means that if you don't cut interest rates, okay, economic slowdown will hurt tremendously. But if you cut interest rate, okay, you might cause inflation to spike up. But now the two risks are now on par. Last time they're all waiting for inflation to come down, so they hold on to interest rate. Now they are worried that if we hold the interest rate too high, the economic activities will slow down and cause a recession. So right now, the ECB was very clear. The risk of undershooting inflationary target and eventually have to pay the too high a price in terms of declining activity was now seen as at least as high as risk of acting too early and overshooting the target in the medium term. So that's the Europe Central Bank's perspective. So the Europe Central Bank now hints very strongly in a June rate cut. June rate cut, right? They also have a very positive outlook on inflation with a forecast for the year to bring down to an inflation rate of 2.3 to 2.7%. So the Europe Central Bank and Bank of England are both predicting inflation rate coming down in a strong and powerful manner. So if the Europe inflation and the UK inflation are all coming down, it cannot be that the US inflation is going up. Okay, so clearly these central bankers know information more than you do and I do. So I think this is extremely good news. In the last Euro Central Bank meeting, there is a majority who vote that current interest rates has to be held at where it is, but a few members are already starting to advocate that April interest rate has to be cut. So they were outvoted. But this means that somewhere in May, June, where it's coming, where the next meeting will be in June, there is likely that there'll be a stronger pressure to cut interest rate. So this is very good news from the stock market. And that is why right now the S&P 500 has crossed 5,200 points again. And we are just a few points from another record high again. And if what I see and what I say is going to come true, then we will start to see another record high and record high and record high, not just in S&P, but in the NASDAQ as well. This could be an end of the retracement that has gone down about 4 to 5% and start of another bull run. So I use the word reigniting another bull run, right? So a bull run that's already happened is going to go another bull run again. Well, it may not happen. It may not happen depending on what the inflation rate, the data will come out. But likelihood is high. Likelihood, in my humble opinion, I could be wrong. I better say again. And if I'm correct, then an all-time high will be reached again and followed by another all-time high. But we should watch closely and see, depending on the inflation news. The single biggest fear that we have is reinflation in US specifically. If there's a reinflation, that means the inflation rate go up again. Then we have it, right? We will know very soon on the 15th of May whether that will happen. looks like the UK Central Bank and the EU Central Bank are all predicting a fall in inflation rate. So we shall see whether this thing will happen in US as well. So I'm very optimistic right now. What do you think? Okay. Let's see, shall we? So with this, I'll see you in a day or two. Please remember to like and subscribe our YouTube channel. And please join our Telegram channel where we have a discussion. Thank you and goodbye.